Welcome back to The Explainer. If you are a fan of dissecting how top-tier companies don't just survive but totally dominate ruthless markets, well, you're in exactly the right place. Today, we're diving deep into Navan's absolutely massive Q1 fiscal year 2027 earnings presentation. Honestly, they haven't just weathered the current software environment, they've delivered an absolute masterclass in both growth and efficiency. So let's cut through the noise and see exactly how they pull this off.
Here's our quick roadmap for today. We'll kick things off with the SaaS Holy Grail, then crunch Q1 by the numbers. After that, we'll unpack the AI advantage, check out their market momentum, and wrap up with the road ahead.
Section 1. The SaaS Holy Grail. Growth meets profitability.
You know the drill in the current macroeconomic climate, right? Companies usually have to make a painful choice, burn cash to grow or slash costs to scrape out a profit. Hitting both? That is the literal SaaS Holy Grail, and that's exactly the story Navan is telling for Q1. But hey, before we get completely lost in the spreadsheets, let's just ground ourselves for a second. Behind all those massive gross booking volume numbers are real people. It's an employee rushing through an airport, checking into a hotel, or expensing that huge client dinner. Navan is powering all that real-world motion, and doing it super efficiently? Well, that's what's completely turbocharging their bottom line.
Section 2. Q1 by the numbers, accelerating top line and margins.
Okay, the sheer acceleration here is just fascinating. Gross booking volume, or GBV, hit a whopping $3.1 billion for the quarter. Guys, that's a 50% jump year over year, and it's actually accelerating from the previous quarter. Now, at the same time, payment volume reached $1.28 billion. That's a 29% acceleration right there. So they aren't just booking the travel. The actual volume of money pumping through their payment infrastructure is surging right alongside it.
So, how does all that volume actually translate into cold, hard revenue? 40%. Navan posted a 40% year-over-year revenue growth, hitting $220 million for the quarter. Let's put that into perspective. In a world where a lot of enterprise software companies are popping champagne over 15 or 20% growth, printing a 40% top-line growth rate at this scale is just a massive, massive signal of market demand.
But remember that Holy Grail we talked about just a minute ago? Growth alone just doesn't cut it anymore. So the absolute crucial point is this next metric right here, 11%. That is their non-GAAP operating margin for the quarter. They expanded their margin by a seriously impressive 900 basis points year over year to reach that 11%, meaning they are growing revenue by 40%, but they're actually expanding their profitability even faster.
Which brings us to what is, honestly, probably the most staggering number of the entire quarter, 783%. Yep, you heard that right. That is the year-over-year jump in non-GAAP operating income. They soared from just $3 million back in Q1 of fiscal year 26 to $24 million today. I mean, when you see operating income grow by almost 800% while revenue is growing at 40%, you are looking at some insane operational leverage. They're piling on revenue without piling on the proportional costs.
This really paints a picture of the wild journey they've been on. If you go back just a couple of years to fiscal year 25, their last 12 months non-GAAP operating margin was sitting at negative 32%. We're talking a really heavy burn rate. Fast forward to Q1 of fiscal year 27, and boom, they're at a positive 11% margin. The sheer magnitude of this financial turnaround in such a short window is phenomenal. So you gotta ask, how exactly did they flip the script so effectively?
Well, that brings us to Section 3, the AI advantage, the secret sauce.
To really get that massive turnaround, we've got to look under the hood at the technology actually driving those margins. And it all starts with a major tech announcement, NAVN Anywhere. This is a brand new integration built specifically to embed Navan's AI travel agents directly into third-party corporate platforms. So instead of forcing your employees to open up a new app, log in, search, switch contacts, which we all know is a huge pain, NAVN Anywhere just completely kills that friction. It literally lives exactly where your employees are already working.
Now, in practice, this translates to some seriously powerful collaborations, like their new integration with Google Cloud. Navan's AI travel agents are now completely seamless inside Gemini Enterprise. Users can plan, book, and manage their whole trip right there through Gemini. It's a brilliant user interface upgrade that just naturally drives adoption, which, you guessed it, feeds straight back into that surging gross booking volume we talked about earlier.
But look, AI isn't just about giving people a flashy user interface. It is the absolute operational secret behind that jaw-dropping 783% profit jump.
56% of all customer interactions in Q1 were handled entirely by Ava. That's Navan's AI support agent. Just think about the sheer cost savings of having an AI handle over half of your entire support volume. And it gets better. Over 30% of those AI model calls are now running on Navan's very own proprietary models, which is up from 20%. Bottom line? As they grow, their variable costs for support are not scaling at anywhere near the same rate as their revenue. That right there is the literal definition of software efficiency.
Moving on to Section 4, Market Momentum, Enterprise Wins, and Partnerships.
So, the big question, is the enterprise market actually buy into this whole AI vision? Well, the answer is a resounding yes. Let's just quickly rattle off some of these massive go-to-market wins from the quarter. They welcomed some huge marquee logos like Allegiant, Criteo, and Schindler. Their RFPs up over 200% year over year. Crazy. Plus, they signed an expanded partnership with Visa to back up all that surging payment volume we saw earlier. Oh, and they also secured the largest annual contract value deal in the entire history of their expense product. Talk about momentum.
Finally, Section 5, the road ahead, raised guidance.
You know, when a quarter comes in this strong, management usually does exactly one thing. They raise the bar. So for the full fiscal year, they are now projecting total revenue to land somewhere between $907 million and $913 million, which is a growth of about 30%. But the bottom line is where this really shines. Non-GAAP operating income is targeted between $76 million and $80 million. That's an expected year-over-year growth of roughly 109%. They are fully expecting this compounding engine to just keep driving forward through the rest of fiscal year 27.
So, as we wrap up this explainer, I really want to leave you with a final thought to chew on. We've just walked through a masterclass in how Navan used proprietary AI agents to completely automate workflows, delight their users, and drive a mind-blowing 783% jump in operating income. It really leaves us with this provocative question. Is proprietary AI now the absolute prerequisite for software profitability? I mean, in a world that is demanding both high growth and deep efficiency, it definitely seems like the companies building their own intelligent automation are the ones pulling way ahead of the pack. Definitely something to keep in mind as you analyze other companies in the market. Thank you so much for hanging out with me today on this deep dive. Stay curious, keep learning, and I'll catch you in the next explainer.